Hi there, welcome to Kneppy Invest, and welcome to another answer and reply video where I get to answer your questions and reply to your comments to the best of my ability. Now, before we get to the answer replies, I'm just going to show you a couple of photos and a video taken during my run. In fact, one of these photos wasn't taken during my run. In fact, it was taken last night. The pizza I made, here it is, a pepperoni pizza, absolutely gorgeous. So my parents every Friday night make homemade pizzas. You can see a slice of my dad's pizza. He destroyed it by putting prawns on it. I'm very simple. I just like pepperoni, and this was actually really nice. Really nice. So there was that. But I went for a 3-hour run this morning to a place called Crowdy Head, and I just had to stop and take photos. It was absolutely glorious morning, and there is a lighthouse at Crowdy Head. And where is it? Let's have a look to see if I can find it. I actually did write down the number. That's not it. 2337. I'm going the wrong way. That's why. So this is the lighthouse at Crowdy Head, and that's looking north towards what they call the Three Brothers: North Brother, Middle Brother, and South Brother. I actually intend to walk up both North Brother and Middle Brother. I think they're about 500 meters. So they're quite close to Laurelton, Camden Haven, that sort of area. And the last thing I'm going to show you is a video. And again, I'm going to have to find this one. It should say MOV. It should be really, really obvious because it says MOV. So at Crowdy Head, there is actually this sheltered bay that is, I suppose, blocked off from... why can I not find it? Is it separate? In fact, maybe if I list it, I'll be able to set. And it is not there. Oh, there it is. There. I'm not looking. I'm looking for the wrong thing. The last 4 letters are HEIC, but the movies are actually MOV. Anyway, so they have these piers and a break wall, 2 break walls. So in this bay, there's all these boats. It protects the boats from any, big swells, big seas. And I was on one of the break walls, and I noticed there was a pod of dolphins. And I was just watching the pod of dolphins, and I thought, oh, maybe I should take some photos. So I took a few photos, and then I was thinking, as I was taking photos, what would be best? Actually take a video of the dolphins. And during my video, one of the dolphins decided to jump. And that was the first time the dolphins jumped. So here is a video of a dolphin, or one dolphin jumping. So you don't see anything initially, and then you'll see some dolphins just pop up. There it is in the middle of the screen. And then towards the end, this is only 17 seconds long. And as soon as I took this, there it is, dolphin jumping. As soon as I took this, that was it. That's all I wanted, a dolphin jumping. Okay, so that was my morning. And I'm recording this video quite late because it's 11:27 a.m. I do prefer to record these videos at about 10 a.m. So that means I can have the rest of the day off, enjoy the day. So let's get into it. Rick Thillian, 50% USA tariff on steel and aluminium, or aluminum, as they say in USA. Thoughts, and Just James Dean also said rough day for Capital. Let's have a look at Capital chart, because this chart was looking interesting. I can't remember what it looks like now. And of course, Trading Views decides to go slow. Chart still looks pretty good for Capital. I don't mind this chart. A weekly chart looks pretty good as well. In fact, it's been looking good for about 5 years when the share price was down $3. So share price has tripled since then. Now, as someone who does not like tariffs at all, well, actually, that's not true. I think targeted tariffs are okay on occasion. Broad tariffs, which is what Trump has been doing, are not good at all. Now, I don't know a lot about their steel industry. It's been dying for years and years and years, which probably means they have no competitive advantage over any other country. Aluminium, I'm pretty sure, I could be mistaken here, I'm pretty sure they don't produce much bauxite, which means they can't produce much aluminium, which means they have to import most of their aluminium. So if they have to import most of their aluminium or bauxite, that would mean that putting tariffs or 50% tariffs on imported aluminium is just absolutely crazy. I'm just going to actually Google this. USA USA Aluminium. Oop, doesn't like me doing that. Aluminium production. How is that? Oh, I could just, you know what I could do? Just aluminium industry in the United States, Wikipedia. Here we go. Produce 860,000 metric tons of aluminium. Aluminium produced from bauxite was produced by 3 companies at 9 smelters, including Alcoa, which used to own, or still owns, or maybe they bought out Alumina. Bauxite mining. The principal raw materials for aluminium production are bauxite. And here we go. US imported nearly all the bauxite, the only commercial aluminium ore used in producing primary aluminium. For years, USA has produced less than 1% of the bauxite used to make aluminium. And I'm pretty sure they can't really expand their production. So this is just a weird thing to be doing. I don't understand it. So most of the bauxite comes from Canada. Yeah, Canada. There you go. A bit of China, bit coming from Russia, United Arab Emirates. Anyway, so I don't understand the aluminium part, just because what are they going to do? They can't just simply go out and produce more aluminium and bauxite, because it doesn't, you just can't do it. It's just something you just can't do on the spur of the moment. So I just don't think it's going to be beneficial for the country, and it's going to be harmful for a lot of steel makers, maybe, or whatever, whoever uses aluminium. Anyway, maybe not steel makers. Anyway, so I'm not a big fan of tariffs. Just not a big fan. History's shown tariffs are not a good thing for the world at large. It's not good. Okay, Benjamin King says, hi, Kneppy. Jumbo Interactive valuation has been in decline over the past 12 months, while the business has grown steadily across most financial metrics for years. P ratio near a 10-year low. I'll be looking out for a trend killer event. Turn around on this one. What are your thoughts on value play in this growing business? I'll be honest with you, I am definitely have Jumbo Interactive on my watch list. And as you mentioned, the company hasn't just stopped growing, and the company's share price has dropped a fair bit. So this is either the market thinking that something bad's going to happen to this company. We're going to see a significant drop in their financials for some reason. Not sure what. If you have a look at some of the financials of Jumbo Interactive, revenue growth has been around about 15 to 19% over the last 10 years. So even the last 3 years at 16.8%. So we haven't seen any significant change in growth in revenue. Earnings per share over the last 3 and 5 years is a little bit lower, but the last 10 years at 33.2%. Now, this company share price did go bonkers between 10 and 5 years ago. So it has come back a little bit. So maybe that's to do with earnings per share. Gross margins, pretty nice. Operating margins, nice as well. Return on equity, return on invested capital, really high. And P ratio, 14.7. Does seem really low. What I'm looking, compared to what I'm looking at with all these other metrics, it does seem really low. Okay, so let's have a look at the historical P ratio of this code. By the way, revenue, look at that revenue growth. Revenue, now that's the last column here is the last 12 months. So if you have a look at the semi-annual, we have seen, oh, there we go. We have seen a drop in revenue in the past half year. That could be a one-off. Before that, and we have seen drops in revenue in the odd half year before. So we don't want to see another big drop in revenue in the next half year. But if we have a look at the P/E ratio history of this company, it is at historical lows. I'm assuming it is at historical lows, around about 14. The last time it was at 14, that's 5 years ago. Let's go back further. Oh, we can't for some reason. Oh, that's because I've got on, no, there we go. So the last time it was this low was back during the COVID-19 financial panic. In fact, it's actually lower now than it was then. And before that, the lowest it's been was back in 2017. In fact, 2016, it was as low as 9. So we are talking about a long-term low for the P/E ratio. So either the market is getting this wrong, or the market is seeing something bad happening with this company in the next year or so. There is a chance the market's getting this completely wrong. Now, if you have a look at the chart, you also notice the share price is at a nice little support level. We'll say a support zone. And what I'll do is I'll put a little, like a little, another line there. That's the lows during COVID-19. And so between about, we'll say $7.50 and just below $10, that's a nice little support zone for Jumbo. Share price has has really gone sideways over the last 5 years. And before that, you see this massive jump in the share price between 2016, when the valuation was quite low, and share price reaching a high in 2019 of about $28. Now, at that point in time, P ratio of this company was as high as 60. So you can just see that even though this company really hasn't seen any financial contraction, it's still growing. You can see what has harmed this company. It's just been a period of multiple contraction. The market is less willing to pay premium for this company. So the P ratio has gone from 60 to 15. And that is all that's needed in this sort of situation to see the share price go down. And we see this regularly, that the share price of a company moves because of two reasons: financial expansion or contraction, multiple expansion or contraction. Sometimes a company can grow and grow and grow, but the share price does nothing. In fact, it could go backwards. That's because of the multiple. That's because the market is less willing to pay a premium for the company. And that is what's happening with Jumbo over the last 5 years. Back in 2019, the market was willing to pay a really high premium for this company because maybe the market thought there was going to be really big growth in the future for this company. Or you can just see the share price, a lot of momentum in this chart. So the market was overreacting to the high side. The market was getting a little bit ahead of itself. And then we saw the share price pull back. And since then, I moved that line. And since then, the share price has gone backwards, and it's at an interesting level. Another reason I was paying a little bit of attention to this company is we have seen a bit of an increase in volume the last few weeks. So that is of interest to me as the share price has hit this support zone. So definitely Jumbo Interactive is on my radar because of that. And all they need is one really good financial number, profit upgrade or something like that, and we might see a bit of a trend killer event. Thank you, Benjamin King. Port and Mail says, what are your thoughts on Regis Health? This was one I was following for a while, Regis Health. Where is it? Regis Health, REG. I was going to say it was REG. I was going to say RGS. So this one was on my radar because a beautiful chart. That's the only reason it was on my radar. Beautiful chart. They're in healthcare. Was it? I'm pretty sure it's elderly healthcare or something like that. Or is it they own accommodation, elderly accommodation, residential aged care services? My problem with this sort of area is changes in regulation could significantly affect this company. And I'm pretty sure that has happened in the past. If you have a look at the weekly chart, share price was in a downtrend between 2015 and 2022. Share price went from $6 down to a low of $1. And I think some of that would have been regulation. But definitely since the breakout back in May 2023, share price of this company has gone up fourfold. So the chart looks really good, nice momentum. But just because the share price is going up doesn't mean share price will keep on going up. We saw that with Jumbo. So the chart still looks pretty good. And I was thinking of getting into this just as a trade a while ago. And I thought at that time, maybe I'm too late. And I think that was back when the share price was like $3. And the share price has gone up, well, it's more than doubled since then. So I think a lot of positive momentum behind this company. I cannot tell you at all how this company is going financially. I've not looked at it. So let's have a quick look at the financials of Regis Healthcare. Oh, no, that's the wrong one. REG, Reginius. Regis Healthcare. And if we have a look at the overview, so revenue growth, roughly you will say about 10%, but the revenue growth has been accelerating. When we know that because over the last 10 years, it's 9.9%, but the last 3 years, it's 15.5%. So we are seeing accelerating revenue growth, earnings per share growth all over the place. In fact, the last 5 years, it's negative 17%. Over the last 10 years, 34, and 3 years, 24.6%. Gross margins and operating margins really low, which is not surprising. And return on equity and return on invested capital, 5-year average negative, P ratio 163.4. So you can't really look at that. And I'd say that's the reason behind that is if we have a look at the revenue, so we have seen a nice growth in revenue. In fact, this is exactly what I'm looking for with growth in revenue, but The other thing I want to see is shares. So shares outstanding. Have we seen a significant increase in shares outstanding? No, not much. In fact, shares outstanding being sideways. So revenue increasing, shares going sideways. So that's actually a good thing. So just by looking at revenue, I should be having a closer look at this company, but I am turned off by the possible change in government regulations. Now, if you have a look at income, you'll see this is probably going to be quite lumpy because of one-offs. So what I'll do is I'll get rid of revenue and earnings, not shares outstanding. And yeah, so profit is all over the place. Back to being profitable looks like, but yeah, profits all over the place. And now back between 2015 and 19, profit was going sideways at around about $50 to $60 million. So just by looking at profit here, yeah, no interest in that. And the last thing I'm just going to have to do is look at return on equity history and also return on invested capital history. And we'll get rid of income. Oh, and we'll also get rid of return on equity because you can see there was 1 year where return on equity was negative 162,000 or something, and it just distorts the whole graph. So we get rid of that. Return on invested capital has been really low, really low. And I did notice if we just have a look at return on equity, and what we can do is get rid of the last year. So we just go to 2017. So return equity was 28% back in 2017 through to 2019 and has been dropping. Anyway, so you can just see that the share price has really run up a fair bit. And I think the market is expecting the profit and some of the other financial metrics to catch up to what the share price has done over the last 3 years. 2 years. So this is a case where the market is forward looking and expects some pretty good results from Regis Healthcare. Chart looks pretty good. Backward-looking financials don't look good, but I think in this case, yeah, the market is expecting some pretty good numbers from this company over the next few years. Ben Hutchinson, talking of trend changes, have you seen Hillgrove recently possibly bottom out? So I was holding Hillgrove, then I sold out because, well, I wasn't impressed with what they were doing. Also, the chart looked pretty ugly. So let's have a look at the chart again. And for some reason, this is really slow. Yeah, possible. We'll put this maybe on the watch list. Now, the one thing I noticed is you can see the volume. When the share price got to its low on the 4th of April, there was pretty big volume, 7th of April, pretty big volume on that day. The volume has decreased a bit, but it has remained elevated compared to what we saw towards the end of 2024. The volume was quite low as the share price was dropping. So, and you probably see this in the weekly chart. Yeah, did see a bit of a jump in volume when the share price got up to 8 cents back in early 2024, then a drop in volume, and the volume has increased as the share price moved to its low. It's trying to turn around. This is sort of trying. I wouldn't be there just yet, say it has bottomed out, but I wouldn't be surprised if 7th of April was a bottom for this. This has a potential, I think, just has a potential at this point to be moving into an uptrend soon. And the best way for that confirmation would be to see a moving average crossover. And I'd love to see some good financial numbers or good update or announcement from the company. Anyway, so I'm not willing at this point to get back into Hillgrove. Oh, HBK Fortis. I remember you mentioning a company with an investment in SpaceX. Do you remember? I remember mentioning a company with SpaceX, but I couldn't not tell you that company. And thankfully, thanks to Trader Hooper, he actually mentioned which companies they were. I can't seem to find anything using Google or searching the past videos. Thanks. So Trader Hooper mentioned Pengana Private Equity Trust and also Gowing Brothers. HBK Fortis said, thank you, sir. It was Pengana. I also think it was Gowing Brothers. I have a feeling it was Gowing Brothers. For some reason, that's in the back of my mind, Gowing Brothers. And I can't remember what I looked at, by the way, there. And which was it, the half-yearly report and accounts? I think it was this. And the reason this was interesting is because you could get exposure to SpaceX. through this company. That's right. They own stuff in Coffs Harbour and Port Macquarie, shopping centres in that area. And this is starting to, and they also own surfwear, Going Surfwear, Surf Hardware International, Saltair Commons. Oh, it wasn't this, I think. No, here it is. Here it is. Yeah. Gowings at a glance. So they also own some shares in Cobram Estates, Carlton Investments, Symbix, EFT Shaw, Woolworths for some reason, De Grey Mining, Evolution Mining, Wholesale Investor, Tasmania Oyster Company, and there's SpaceX. Yes, I always remember that. SpaceX. Anyway, and also HBK Fortis says Pangana P1 owns some shares in SpaceX. How can we confirm this? How can we confirm this? Looks like we're going to have to go back. They have the NAV. I don't think the NAV will be helpful. They're doing a buyback. I'm hoping in their report they do mention, yeah, the NAV is no help there. I'm just hoping in the half-year report they do mention their holdings. Sometimes they won't, but sometimes they do. Let's have a, we're going to have to do this fairly quickly, which means I could definitely miss it. They're more likely to mention their holdings in our full-year report. And I'm hoping, yeah, they don't have it here. I can't see it. Investments, oh, here's investments. No. I'm going to move on. Investees. Yeah, I'm going to move on. Anyway, definitely Gowing. And I'm pretty sure I remember talking about Gowing owning SpaceX. So thank you for that, Trader Hooper. Paul LY S6T says, can you please look at the chart of the EOS, Electro Optic Systems? This was a chart of the day during the week, if I remember correctly. I could be completely mistaken because I intended to include this company as a chart of the day. So let's have a look at the chart of Electro Optics. Chart has gone simply bonkers recently. Absolutely nuts. In fact, share price up 10.75% on Friday. This is, look at volume, look at that massive volume. So a lot of interest in this company, and then what a breakout that was. Now, I do own some shares, so at least I'm taking advantage of this breakout. But the question I would have to myself is, would I be willing to add to my trading position this? Well, the amount of shares I own in Electro Optics is not a trading position, it's a long-term position. But would I be willing to trade this right now? Personally, no, because the share price has increased significantly in a fairly short period of time. Share price is getting ahead of itself, and I would expect the share price to pull back significantly at some point. It could happen tomorrow, well, maybe not tomorrow, because tomorrow's Sunday. It could happen on Tuesday, Wednesday. Now, the best case scenario would be share price going sideways for a while, just waiting, taking sort of like a breath. So right now, the way I look at it, Electro Optic Systems is sprinting, and you can only sprint for so long before you need to stop and take a breath. What I typically look for is a marathon setup when the share price of a company is just going up and up and up and up, not accelerating up like this or sprinting. So that's what I look for, is more of a nice uptrend. This is just too much, too quickly, and I have seen this time and time again. When this sort of thing happens, share price always tends to pull back significantly. You'll see a sharp pullback in the share price. Now, it doesn't mean it will happen tomorrow or on Tuesday, but eventually it will probably happen. But again, the best case scenario is that doesn't happen, and you just see share price go sideways and taking a breather. So sort of like sprinting, and then not sprinting as quick, just taking a breather before the next time you can sprint. Sort of like doing, what do you call it, when you sprint and then take a little bit of a slower bit and then sprint, slower bit, sprint, doing intervals. That's it. So that's best case scenario, is if Electro Optic Systems is doing intervals right now. I just find that volume really interesting. It's just a massive increase in volume. If you have a look at the weekly chart, this will be amplified. Yeah, look at that volume the last 3 weeks. And look at this chart. That's an incredible chart. By the way, yeah, look, it sort of happened here as well. We just zoom in. We saw the share price really take off back in early 2024. Share price went from $1 up to $2.06 over a 6-7 week period. And then the share price did pull back slowly. Just James Ian says, IFT mystery solved. Damn Kiwis are a confusing lot. Net asset value is Kiwi for total assets. There you go. Yes, so this was either last week or the week before when Just James said IFT had net asset value a certain amount, and then when I looked at it, it was much lower than that, and looks like Just James Dean has solved the situation. Okay, some interesting insight from Happy Now. I have a few friends in the Asian regions and can confirm Penfolds holds some high regards. However, while they don't make up the whole of Asia, I know things are getting tougher in that region, and the demand or extra income for wine is harder. So backs up your thoughts on demand of this company. Please don't make MTM the stock of the day. Please, my poor heart soul cannot handle it. I did not make it the stock of the day just because of you. Anyway, so it's good to get insight from the rest of the world. I do know that Penfolds is highly thought of around the world, so it is a premium brand, and I'm wondering if this sort of premium brand is highly inelastic, which means you won't see much change in the demand of this particular brand if we see a significant increase in price. I'm just wondering, because sometimes that does happen for luxury goods. They can increase a price and you won't see much of a change in demand because those who are willing to buy it are probably the richer people and they don't care about price sometimes. Or they're less willing to forego that product if it's a little bit higher in price. For me personally, I am willing to forego that product. And I see that with chocolate right now. Chocolate's ridiculously expensive and I'm willing to eat less chocolate. SR443SR says, really interested in Brookside lately. Remember you thinking it was a long-term hold late last year. Interested what you think currently. Love your work. Brilliant vids. Thank you. That's the only reason I'm talking about this comment. No, it's not. I own Brookside. It's in my super, which means I am way less willing to sell that because I think this is more of a long-term hold. Now, I'm getting a little bit fed up with Brookside and their management because they do have a lot of potential. Some of their looks look really good. Don't think I could show you some of the outlooks because I was going back a fair bit. So they are expecting significant increase in production over the next few years. But what they're doing is whenever they see a bit of an increase in production, they start to really increase their spending. So in a way, I don't like that for this company because I don't think the market wants that either. The market, I think, wants to see some really good cash flow coming in and maybe even some dividends. But I think the management of this company is more willing to take that increase in cash flow and start, exploring for other stuff or put that money into try and increase their revenue in the future. But anyway, so they do expect some pretty good. They did a consolidation. That was really good. I'm trying to remember when they did last mention their goals in the future. I can't remember. Anyway, so I do think this company could be considered quite cheap at current levels. Now, if you have a look at the last Appendix 5B or the operating cash flow, I can't remember what this was like. It wouldn't have been that good. It wouldn't have been amazing. Here it is. So $18 million in operating cash flow, operating in receipts, $4.5 million in operating cash flow, but they did spend $4.6 million in exploration and evaluation, $1 million in capital expenditure. So spending all that operating cash flow in exploration and evaluation, and still company has how much? $12.7 million in cash, and the company is not that expensive. $12 million in cash. Don't think they have much debt, if any debt at all. Try to remember. Well, they do. Oh, no, they don't. They have $39 million or $40 million in unused financing facilities. So the company has $12 million in cash, market cap of $36.87 million, so enterprise value of $24 million. And the company could be producing a lot of cash flow in the next few years if they want to. Let's have a little chart. And just a lot of negative sentiment in this company, even from current shareholders. That's why the share price has been going down and down and down, just because of negative sentiment. So I do think there is value in this company, but the chart still looks pretty bad. No end in sight, although you could say share price has been going sideways for the last 3 months. Suppose that's an argument. Scott says, Audinate looks mad oversold the last couple of days. I couldn't resist. $7. Fish on. Let's have a look at Audinate. We'll also have a look at RSI. Now, let's have a look, without having a look at RSI, whether this was oversold. I'd say no. I don't think, we haven't seen a significant drop in share price. The funny thing is, so the share price has been a downtrend. We've seen little periods where the share price has taken off and then pulled back. But I think this share price did reach a low on the 7th of April of 530. I think this is getting to the point, particularly when they will release an okay to maybe a good financial result and also an outlook, that I think we're going to see the share price of this company move into an uptrend. And at that point, I am going to add to my position. In fact, I might trade it. And then when I do a successful trade, I'll take the profits on the successful trade and put it into my long-term portfolio, if that makes sense. But anyway, I do actually like this chart. Not exactly right now, but I think this has the potential of turning upwards soonish. Has a potential, but definitely not oversold in my opinion. Let's have a look. RSI. I suppose also what time frame you're talking about. Share price did dive a fair bit on the 3rd of June, down 9.22%. So if you do have a look at a shorter time frame, I think on that one day it was probably, you could have said it was oversold. Yeah, on that one day. But I look at the longer time frame. So for instance, it was oversold when the share price got to its low, and it was actually significantly overbought when the share price took off back in February, and was, yeah, anyway. Next on, we have, a few replies also. VBE D666. So VB Ed, I won't mention the numbers because 666, this could be the devil. There is a chance this could be a devil. I'm maybe discussing stuff with the devil. I doubt it. I'll give it a 0.000000001% chance, but it is a chance. Is a chance. So you're saying there is a chance. Dumb and Dumber reference there. Anyway, the order usually drops sharply in June every year when investors lock in their capital losses for the end of tax year. When is the June drop going to start? I'm currently getting some cash ready to buy some June bargains. Let's research this. Let's research this. It makes sense. You'll see tax loss selling, but let's see if this is true. What I'm going to do is I'm going to ChatGPT this just to see if it gives me any sort of interesting response. True or false? Let's see if ChatGPT has any sort of, well, it says false. Breakdown performance. Of all Ords in a table form. Last 20 years in table of all Ords last 20 years for June in table form. Let's have a look. Let's see if we do get a breakdown. Monthly change. So some years it is down quite sharply. So 2008, that was GFC. So if I had a look at this, I'd say most years it's down. So 4 down, 2 up. We can get back in further. So 2 down, 2 up, 3, 4, 5, 6, 4, 6, 4, 7, 4, 8, 5, 8, 5, 9, 8, 9, 8, 10, 9, 10, 9, 11. So up 9 years, down 11 years. So I think ChatGPT is a little bit wrong here, because if you have a look at every month's breakdown, you're probably going to see most months have more likely most months will be positive than negative, because overall the market goes up. So that does mean most months should be positive over negative. But over the last 20 years, June has seen more negative months, and some of these months have been quite negative, like 8.9% down in 2022, negative 5.5% in 2015, negative 4.5% in 2011. So yeah, so I sort of do agree with ChatGPT, but I don't expect a significant drop based off this. And the best year, what was the best year here? It was 3.5% up. So that was the best year. The worst year was 9.8, then down 5.5, also 8.9, and down also 3.7, and also 4.5. So we had about 5 or 6 years that were worse than the best year. So I'm going to have to disagree with ChatGPT and sort of agree, with VBN, that I wouldn't say usually drops sharply, but I do think saying the odds usually drops in June is a true statement, because over the last 20 years, it's dropped 11 Junes, but doesn't necessarily mean it will drop this June. Anyway, Just Same Sense also said last 2 weeks of June can get real wild if US pulls back. It is very tempting to sell everything now and buy everything back in early July. And Redox is getting a trashed bargain. So I would expect some companies to sell off because of tax loss selling. And I think there can be some bargains during this month. So I'll agree with you with that. In fact, I'm looking at some companies just because they're looking like they could be cheap, including Redox, maybe. CoSol, that's another one I was just off the top of my head. Forest Hill says, thanks, Kneppy, for the video and for confirming that pepperoni is indeed the best topping ever. I'm just going to emphasize this a couple of times. Pepperoni is indeed the best topping ever. Is indeed the best topping ever. Now, of course, this is a personal preference, but that's all I need. That's all I need in a pizza is a bit of pepperoni. That's all and cheese and a bit of sauce, but that's all I need. A bit of pepperoni. You can do whatever you want with your pizza, but I want pepperoni. I love pepperoni pizza. Ooh, yes. Oh, another one, Happy Now, and quite a few comments in regards to this one. The Happy Now mistake, selling out of MTM, still burns me again today. I think the most important thing is to understand that not every decision is going to be absolutely perfect, and don't dwell on any decision you make. So more than likely, you made a nice little profit with MTM, and this does show signs of bit of profit taking coming in and pulling back. I wouldn't be surprised to see a significant pullback in MTM, just because share price has gone bonkers over the last 2 months. And the share price is well above the moving averages, that sort of thing. And I'd say this is significantly overbought. Let's just confirm that. This is significantly overbought, and I would not be surprised we're going to see significant. Yeah, look at that, significantly overbought. And I would not be surprised to see a pretty big pullback. The last time this was significantly overbought, the share price kept on rising, however. And before that, it was overbought. The share price went sideways. So best case scenario here is the share price just sort of goes sideways. You can see the last time we saw the share price go up a fair bit, share price just fell sort of gradually. That could happen. And the worst case scenario is we see the share price sell off 20 or 30% in a few days. So I would say you didn't make a mistake. Anyway, so I super regret, but have to live with a decision like yourself and many that do what we do here. Yeah. Also, pineapple for the win on pizza. No. Well, do what you want with your pizza. I think it's very important not to regret decisions you made, because sometimes the decisions you made help you become a better person or a better investor. So embrace every decision you make, even if it turns a little bit against you. And the other thing is, I'd also say it's almost impossible to time perfectly the market. So I also heard this morning, listening to some podcasts, Scott Phillips saying it's why timing the market is stupid and impossible. It's not about perfectly timing the market. It's all about probability and protecting your capital, in my opinion. So I actually don't agree with Scott Phillips about that. He's always fully invested, but he doesn't know how to protect his capital, in my opinion. He's just fully invested, but he can learn and become a better investor by learning how he could protect his capital. So embrace your decisions. Even if you think they are a mistake and you're regretting it, embrace it, to try to become a better investor. Trader Hooper says, sometimes you need to focus on the money that you banked and think that next time you might sell part rather than the whole holding. So that's something I've learned. So in the past, I've completely sold out of a position, and then I went, well, do I really want to do that? Just take a bit of profits and maintain a holding. And then you can, make decisions after that, whether you hold that for a long time or a short time. Sort of like Electro Optics. Share price went from $1 to $10, and I did not completely sell out. I maintained a little bit of a holding, and then the share price fell from $10 to $1. So I do wish I completely sold out, but I know in the future that if I did the same thing with Electro Optics or another company, and I sold some at $10, share price might go from $10 to $100. Anyway. Unfortunately, this one continued to run without you, but it could easily have gone the other way. Yes, it could have, yes. I think it's very important also to have some rules. So that way, if you follow your rules, even if a decision goes against you, you've got a backup. I'm following my rules. And that actually works really well for me. Made a decision, follow my rules. Sure, it's gone against me. Prenti is a great example. This is a great example where I follow my rules, and I don't regret this at all because I just follow my rules. So Parenti, I showed you the other day, Parenti, share price collapsed on the 24th of February. I went, I'll just sell because that's my rule. Share price has gone up. But if we have a look at Red Dogs, same situation. I followed my rules. Share price dropped on the 20th of February, and the share price has significantly gone down from there. So this is just me following my rules. So don't linger on the mistakes you've made. And also the other thing is also acknowledge when it goes for you, like with Redox. Don't linger. So for me, I'm not lingering on Parenti. I'm also acknowledging that it went right for me when it came to Redox. So it's very important that you do that sort of thing. Thanks for these words. We'll do more. This is more focused for sure. I haven't sold very often, as I only started this journey 11 months ago and only bought my first shares in October last year. And that's the other thing. You're a novice, I would say. You're going to learn so much over the next 5 years if you continue on this path. And also know quite a few new investors lose a little bit of money and they just think it's a mugs game. They won't make money. And I almost guarantee you a lot of investors lose money in their first few years. I try to remember, I did not, because I was just fortunate that I bought in 2010 and that was near the bottom. And so I was fairly lucky that, but I made so many mistakes in the first 5 or 10 years. I still make mistakes right now, but if I did not make mistakes right now, that would be concerning, because what does it mean? It means I'm not doing anything different. I'm not learning anyway. And Trader Hooper says, there will be a time when you think, thank goodness I sold. However, if your rules are working against you, don't be afraid to adjust them. That's a good point. Also, you may need to adjust them in different market conditions. What works now when all is doing great may not work when conditions are tougher in the market. It's a continuous learning process. Trader Hooper should form his own podcast or his own channel. Excellent. Bit of toing and froing there between Trader Hooper and Happy Now. Just James Dean has given us another end of financial year bargain. Flight Centre. I'm not sure about this one. Not sure about Flight Centre. Is this a bargain? Share price is down. Is this a bargain? This is one where I just don't know. I'm just going to have a quick gaze on the dividend yields, really low, 3.12%. PE ratio, 25.58. I just don't know about this one. Let's just have a look at Flight Centre. Overview. Revenue, we saw that big dip during COVID-19. Revenue hasn't gone back up to where it was pre-COVID, and I think it's going to struggle over the next few years to get back up to those levels. I'm not in the same camp as Just James Dean when it comes to Flight Centre. And we have seen this particular sector struggle. Maybe if the share price gets down to about $8, I could think of that, which is the COVID-19 low. Although we could say share price is not much more than the COVID-19 lows. I'm toing and froing with Flight Centre. Not sure it's a bargain. Not sure if I could go there. Xtrader says, love your work, but I'm not sure I share assessment of MinRes as a borderline quality company. I would probably say, if I did say it's a borderline quality company, I probably meant when I bought it, it was a borderline quality company. I would definitely not say MinRes is now a borderline quality company. I would put it alongside other mining companies. And when it comes to mining companies, they are not close to being quality companies. Among the mining companies, BHP would be the highest quality company, but still it is not a quality company, in my opinion. So definitely MinRes is nowhere near in that part. So last 12 months, poor governance, resignation of independent directors, CEO undisclosed dealings with conflict of interest, does not tick a quality, let alone high quality company box. It's definitely not only exposure to the commodity cycle at work. Anyway, so a lot of interesting things there, which I do agree with, but it's not just those things, it's just the company itself and the sector. So that's why I would not consider MinRes to be a high quality company, just because it's just in the wrong sector, in my opinion, for high quality companies. So it's a price taker, not a price maker. Jaycees has also given us some insight into Painchek, down because of timelines. I think I did mention this, change in timelines. So when a company does have a change in timeline, you can sometimes see the share price drop a fair bit. So was expected in Q2 when first submitted, then the last update we were expecting it by the end of June, which was again reiterated by CEO just last month in an update. Another delay, unfortunately, however, that is only negative news. Everything else the company is doing right now seems to be setting up for post-FDA approval, which seems likely. So all it takes is a little bit of delay, and you can see the share price of a company just sell off a fair bit. And that's what happened with Painchek the other day. I don't understand why the market does that. I see this over and over again. Just a little bit of a delay, and the market just panics and sells off. And this is what happened with Painchek over the last few days. Share price has dropped from 5.8 to 4 cents, which is a fairly significant drop on just a bit of a delay. Nothing has changed. It's just a bit of a delay. So thank you for that, JC. So obviously you know the company way more than I do. Ben Hutchison mentioned Clarity Pharmaceuticals. That Disco study result was very strong. Still a long way to go for Clarity, but it will be a big one day. It will be big one day. I sort of agree with that. I do have a holding in Clarity. This is a case where I don't care about the chart. So in fact, I would say if the share price does fall below, say, towards $1, I would buy some more shares. So share price did, why is it not zooming in? There we go. Share price did climb at 12% on that day. The volume was a little bit lower than what I would have wanted, but I have a feeling the downtrend has come to an end. I think the low was or is $1.50. And I do have stronger thoughts. I do think there is high potential for this company, but Clarity is still a story stock. Has no revenue, still a story stock. A lot of things can go wrong, but does have a lot of potential. But still a story stock. DSHW, SDI bottoming by looks, forming a long wedge. Possible breakup with sound fundamentals. Also interested in your opinion on IVE Group, IGL fundamentals. SDI, what's SDI? That's SDI Ltd. Oh, that's the dental company. They produce dental stuff, something like that. Something to do with dentistry. The last announcement they did release was in February. Gee, that's a long time. Anyway, let's have a look at the chart for SDI. This was not about the company itself, just the chart. SDI. Ooh, see, I don't mind this, what's happening here. So share price has dropped. Share price looks like it's starting to base, starting to go sideways. And let's have a look what he said. Bottoming by looks, forming a long wedge. Yeah, so I do think this is a possible sort of, what we call it, a bottoming phase, possible bottoming phase. This could continue for a long time. It could continue for a long time, but I do like how it's just been going sideways for a while. And the other one was IVE Group. I don't know much about this company. Let's have a look at IGL. Let's have a look. What I'll do is I'll go to FinChat, just see what it does. Engages in the marketing business in Australia. The company provides conceptual and creative design across print, mobile, and interactive media, personalized communications, including marketing automation, marketing mail, publication mail, e-communications. Revenue growth has been okay, about 10% per year. Earnings per share has been actually accelerating up to 18% over the last 3 years. Gross margin is 25.5%, operating margin is 8.1%. So that's on the low side, which sort of makes sense. I would assume this company doesn't have much of a moat or competitive advantage. Return equity 10.6, return invested capital 20.1. That's pretty nice. Have a little bit of debt. No, a little bit of cash. No, a little bit of debt. Your debt, the reason I say that is market cap is 400 million, enterprise value 621, so debt of $220 million. P ratio is 9.9. And let's have a look at the chart. So no opinion on the company at all, but those numbers probably better than I would have expected. So let's have a look at the chart. IVE Group. First of all, the weekly chart. Share price. It did actually get to an all-time high a few weeks ago. 12th of May, got all-time high. But if you have a look at this since it listed back in 2015, it hasn't really gone up all that much, from $2 to $2.57. Dividend yield 2.1%, P ratio 9.5. So maybe some value because this company is growing. So a little bit surprised with IVE Group, what I've seen just here. So thank you for that, DS. Yeah. By the way, I did not have a look at fundamentals with SDI. Let's have a look at fundamentals with SDI because you did mention it. I'm pretty sure this one has been growing slowly. Let's have a look. Yeah, slowly. Revenue growth, roughly about 6% per year. Earnings per share growth, a little bit stronger than revenue growth. So it shows maybe the company has hit some sort of operating leverage. So what you really want to see is earnings growing at a faster rate than revenue. So revenue growing quicker rate than spending or their costs. P ratio 9.6, gross margin 63%, operating margin is 15.7%, return equity, return invested capital around about 10%. And I'm wondering if that has grown over the last few years. Let's have a look at those. Return on invested capital, return on equity. And I've been going sideways over the last 10 years. So we could say the return on equity and return on invested capital, roughly about 10% for this company. And based off the valuation, P ratio, maybe there is some value with this one. Dividend yield 4%, payout ratio 38.3%. So maybe some value in SDI. And has a little bit of debt, not a lot. And P ratio, not the P ratio, the market cap's about $100 million. Couple of interesting companies there from DS. Fishball says, I hear you mention amateurs open the market and professionals closes it. I agree, but one of the reasons which you never mentioned is the closing auctions are normally with very high volume and can only be done by institutions. I just want to actually mention here that there is a saying that amateurs open the market, professionals close it. I don't necessarily agree with that. I think it's an oversimplification of how the market works. I have bought on open and I've bought on close. I've sold on open, I've sold on close. And I'll call myself an amateur, not a professional, and I will do everything. It's all about timing, but it's just a saying. I think there's just a saying out there which I don't necessarily agree with. I'll just say that right now. Okay, Sanka says, hi Kneppy, what do you think about West African resources? 3 down days, political and regulatory changes in Burkina Faso. Thank you. I think there's an overreaction from the market. That's all I'm going to say. I think share price has sold off, and I think the share price, possibly even a buying opportunity. Share price, you can see the share price selling off a little bit. I think this is just a little bit of a pullback, and eventually the share price will find a little bit of a base and start going up again. Yeah, I have no concerns with this one. No concerns with Burkina Faso. There have been at times over the last few years when I bought West African, there's been about 2 or 3 times when the market has been concerned about regulatory changes. There was a coup d'etat in Burkina Faso, and the market just sold off on West African. That was an overreaction. There was something else a few years ago, maybe a year ago, when the market sold off and that was an overreaction. So I think in the end, this is going to be an overreaction from the market. Just James Dean says Coronado paid $1 billion of dividend in 2022 versus current market cap of 300 million. Yeah, in running out of cash, I think this was really bad capital allocation from the management of this company. So I've mentioned this a few times now. In my opinion, the most important job of management for profitable companies is capital allocation. What do you do with the money the company has made? Most non-profitable companies don't have to worry about this, so it's not really that important. But for a company like Coronado, when they had a lot of, when coal prices were really high, they had a decision to make. What are we going to do with this cash flow? And they decided to give a lot of that cash flow back as dividends. And I think that was a massive mistake. So what they should have done, in my opinion, and they could have been, maybe some of the investors, some shareholders said, hey, give us that money back, give us that money back. And then we've seen the share price of Coronado, it's just gone down significantly since then. Now, what they could have done is, this is a great time to be thinking about acquisitions in this space. Great time to be thinking about acquisitions. You could have had a lot of money on the side, and some of these assets for other companies could be really cheap right now. That's the time to make acquisitions, not when the price of the commodity is at its high. So I think Coronado the management made some really bad decisions. And again, this comes back to Australians' obsession with dividends. Dividends aren't free. And dividends, as in this case, I wouldn't say have destroyed a company, but it's one of the reasons why the share price of the company has dropped significantly. Look at this chart. We'll have a look at the weekly chart. Share price has gone from, I just can't remember when their coal prices were the highest, but share price has dropped by more than 90% since the recent highs back in 2022. And the main reason behind that is, they just did a bad job with their money they made during the peak period in coal. Just James Dean also said, is it too late to jump on APZ, which is, I always want to call this Aspen, but it's Aspen, APZ. We're going to have a look at the chart. This is a building construction company or residential, something like that. Engages in property investment and development. Yeah. Is it too late? Oh, it's a beautiful chart. Beautiful chart. Share price looks like it's getting away from us, isn't it? The share price of this one went up 8.19% on. Oh, that's a weekly chart. That's why that looks really good. And again, so daily chart looks really good as well. Our share price really started to break out back in June, 1 year ago. There you go. And the share price has gone from $1.80 to $3.70. Why has the share price doubled? Yeah, anyway, so chart looks pretty good. I wouldn't buy it right now because the share price is well above the moving averages. And you can see whenever the share price gets above the moving average, we do see a pullback. We see it all the time here. Now, this time, its share price went sideways. Then this time, the share price pulled back a little bit, pulled back. So I wouldn't buy it right now, but a lot of momentum behind this one, a lot of positive sentiment as well. If you have a look at the weekly chart, the one thing I did notice is a bit of an increase in volume in the last few weeks. Anyway, is it too late? For me, right now would be, but maybe in a few weeks if we do see a pullback. And Roger Dawn. Interesting charts on VTX, TKM, currently rising gold tide lifts or boats. So I'm assuming VTX and TKM are both gold explorers. VTX, I don't even know. Vertex Minerals, I've heard this one. Oh, yeah, share price significantly up, 37% in the last week. Look at that. Why has it gone bonkers in the last 3 trading days? Is this just the market getting silly? Up 10%, 8, 11, 10%. Have they released any announcements? Oh, they did. Update, fully developed stope block announcement. Looks like it's an update on the 28th of April announcement. Anyway, the market's got really excited about this one. Nice little breakout back in 26th of August, around that time. What's the market cap of this one? $58 million. I personally, I'm not as interested in these sort of companies. I want to really limit these type of holdings maybe one, maybe two, even when I'm trading. So because there's a lot more volatility, and I want the sort of the marathon uptrend sort of scenario, not the sprinting scenario. So last 3 days we have really seen this company sprint, and when the company sprints like this, it gets tired, and then you're going to see the share price pull back, probably, maybe. And the other one was TKM, which is TKM Trek Metals. Yeah, this one has really taken off. Really interesting breakout in the middle of March. So around about the 18th of March, we've had that's a brilliant breakout. So there must have been some news with this. Really high volume coming through. Share price, we also saw crossover the moving averages, and the share price has just moved forward significantly. Share price has almost tripled since then. So what happened on the 18th of March for TKM? 18th of March. Was it 18th of March? Did I say? Visible, was it 18th of March? It was. They actually released no price sensitive announcements, but they did release an announcement: visible gold in drill chips from Christmas Creek. Visible gold in drill chips, not the sort of announcement that would get me excited, but got the market excited. And major drill program commences at Christmas Creek. So again, this is just a story stock. And yeah, it's interesting the share price has taken off, but we've seen this happen in the past. Share price takes off and then pulls back. So we saw this in September 2021 with this company. Share price went from 6 cents to a high of 18 cents and then pulled back. And we saw this in July 2023. Share price went from 5.8 to 12 cents and then pulled back. So will this be an absolute long-term breakout for Trek Metals? I doubt it, but who knows? Okay, that's it for today's video. 1 hour in. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.